Hello, everyone. This is Noah and John, and it is Friday. So you're going to get your weekly Manhattan market update. Johnny, let's get right to it. I'm looking at supply at 72.71, slowing down. Show me the chart.
Yeah, Noah, you're right. It is slowing down. That's a decrease of only 0.2% in supply, and we've had some much bigger decreases lately. So I'm
Yeah,
gonna call it. I think we're at the bottom of
do
supply.
it. I think you're right. If we're not at the bottom, we're very close to it. I think we're going to have trough supply. And the reason is every year Manhattan has more listing inventory as we get to the end of January, February, and March, etc. So you got to expect this number to come up. And it looks like it's starting to form that bottom. Very good observation, John. Let's move to pending sales, the measure of demand. It's looking at 3164. Looks like it's topping out. Johnny, show me the chart.
It may be topping out. That's only a 1% increase in the week over week numbers, and that's sort of the slowest one we've had in about a month or so.
Yeah.
It's not to be surprised. We're just sort of starting out the season, but I wouldn't be surprised if we've seen sort of the peak of pending for the near term here.
Yeah, especially if buyers are going to look at that stuff that's expected to come on. Usually the saying is first the stuff comes on, John, and then the stuff goes to contract. And the contracts usually don't start till February, March, April. So you could be right. So we'll keep an eye on that. In the meantime, we're looking at the UrbanDigs market ticker. I'm looking at 1 week Manhattan production. We brought in 308 new listings in supply. Johnny, show me the chart.
So, as you can see on the ticker, that's about an 11% increase on the week. But what's interesting is if you look at the year over year basis, and I know 2020 had seasonality, it was all totally messed up, but there was a good few months in which we sort of started out as a normal market, January, February, and the first half.
That's right.
And this number, this 308 number that you just referenced in terms of the weekly new actives, is actually 6% lower than the same week last year. So we're sort of starting out a little bit less frenzy for sellers to kind of get out there. It's not, it's just 1 point, but it's interesting.
That's a very good point. And I guess another way of saying that is in a really good active season or a regular active season, that weekly pace is going to go to in between 500 and 600. That's when buyers know that you're probably at your peak inventory season. So I guess what you're saying is this number's low relative to last year. The question is, do we reach that 550 and 600 that we usually see during a calendar active season? Time will tell. Very good point. John, let's move over to the measure of demand. 1 week deal volume in Manhattan real estate looks strong. I love it. 246. Show me the chart.
It is strong. That's a 27.5% increase from the week before. But again, let me go back to that year over year comparison. And that's actually 12.5% above where we were at the same period last year. So that's sort of, we're carrying on that momentum that Manhattan started sort of end of October through November, December. It's still going. And I think that's a very strong way to start the year with demand outpacing supply like this.
That's right. If you're scoring at home in terms of last year relative, and that's before COVID really kind of hit, we were aware of it, but didn't hit. There's less stuff coming on. There's more stuff going into contract. That's just where we're at. Very good stuff. John, let's just go outside. One bonus chart for today, short and sweet. We're going to compare the UrbanDigs market pulse with Manhattan and Brooklyn for 2020. It's really interesting to see. And for those of you that do not know, the UrbanDigs market pulse is a ratio of pending sales, which is our measure of demand, and active inventory, our measure of supply. And quite simply, as it goes up, the market's getting better and leverage is going towards sell side. And as it goes down, the market's getting worse and leverage is going towards buy side. And the red line here is Brooklyn. The black line here is Manhattan. And this is the real-time shifting dynamic of the marketplace. And look at this, John. Look at the Brooklyn reflation. We pointed it out. Brooklyn is doing unbelievable things. Manhattan's done great things too, but relative to Brooklyn, just not so much. What do you see here, John?
Well, and you hit the nail on the head. If there's one chart that you can see that can explain the difference between what's happening in Brooklyn versus what's happening in Manhattan, this is it. And as you're drawing right now, look at the spread between these two. So when did Brooklyn start ticking up? Well, 4 weeks or so after the reopen. What is that? Late July, early August, and those contracts started rolling in, and they just did not stop. Look at Manhattan. It sort of kind of went sideways. Then they started picking up late October, early November, and finally started ticking up. But one of the problems with this Brooklyn acceleration is it has been fast and furious. And so, Noah, if you look at the very tail end of these numbers, what do you see there?
I was just looking at the tail end, and I want to circle it for those of you that are watching at home. When you climb that fast, that quickly, you tend to climb that wall of worry. It's hard to sustain it. It tends to kind of fade itself out, burn itself out. It looks like it's topping out. That's what it looks like. It looks like the Brooklyn market pulse is topping out a little bit. I wouldn't be surprised to see that come straight down a little bit as listing season comes in. I would not be surprised to see Manhattan go up and that spread between these two narrow just a little bit. I wouldn't be surprised, John.
Yeah, I totally agree. I feel like if you're a Brooklyn seller right now, this is a great time to be listing. So I wouldn't be surprised to see more supply come into Brooklyn. At the same time, buyers might start having to pause simply because they're starved for inventory. Whereas on Manhattan, it's still, you can tell it's still a bit of a buyer's market. So there's still deals to be had. Either way, I'm going to short that spread.
Yeah, and you're going to have quickly changing pulse as the listing season begins and the contract demand season begins, about 3-4 weeks lagging behind it. First the stuff comes on, then the stuff goes to contract. Excellent stuff. Thank you, John Walkup. I am Noah Rosenblatt. We are both from UrbanDigs. This has been your weekly Manhattan market update, and we'll catch you next week.